Today, we're talking about the potential of Bitcoin, and it's not just about money. Still, we're taking a quick journey through the different money systems of the past and settle once and for all why so many people are convinced that Bitcoin will keep rising in the future. So, enjoy watching. But be ready for a bit of intensity too. When we initially hear about Bitcoin, we're pretty much all the same. We think Bitcoin,
that's just a gambler's currency.
This magic internet money with no real value behind it.
I'm sure. Bitcoin is like a pyramid scheme that consumes a ton of energy.
Back in time, I should have bought Bitcoin. But now it's too late, and Bitcoin is probably going to zero anyway.
And there was probably a time when you thought exactly that, wasn't there? Maybe that time is right now, but hang in there. The important part of this video is only 21 more minutes of your precious time. Speaking of precious time, did you know that time is the only thing that is truly scarce in this world? Your lifetime is limited, and therefore time is a scarce commodity. Don't let anyone tell you that other things like gold or raw materials are really scarce. Thanks to technological progress and financial incentives, we humans are really good at extracting and creating more and more of those. But back to the topic. If we want to understand why the price of Bitcoin can keep rising in the future, we first need to clarify what Bitcoin actually is. It's money and an excellent store of value. Now let's take a closer look at these 2 points. So, what is money? Do you know the answer to that question? Probably not, because as Robert Kiyosaki has already adequately described it, education about money and the handling of finances is just as little provided for in schools today as it was permitted to educate slaves until 1865. If everyone knew how our money system works, it probably wouldn't work anymore. So education is better left out. But what is money then? When we work, we invest our energy and time to create a product or provide a service, and the money we receive in return acts as a storage for the energy and time we've put in, allowing us to exchange it later for a different form of energy and time, meaning other products or services. Additionally, we can use money as a unit of account to assess and compare products or services. In short, money serves as a store of value, a medium of exchange, and a unit of account. And this highlights the importance of a functioning monetary system. As money is serving as a store of value for energy and time, it essentially represents everything in this world. It influences how we act, think, and interact with other people and countries. And over the past millennia, there have been various forms of money. These included things like stones, shells, coins made of precious metals like gold and silver, and of course, the current money, the US dollar, the euro, and other currencies. And all these forms of money share one thing. They don't have intrinsic value. You can't eat or drink them, use them as building material, or burn them for warmth. The value behind every form of money relies solely on trust. People trust that their money will be accepted by others as a medium of exchange and that it will retain its value over time. That's all. But for something to function as money, it needs to have certain characteristics. These are durability, portability, fungibility.
What?
Fungible means interchangeable. For instance, 1 ounce of gold is worth the same as another ounce of gold, or €1 is worth the same as another euro. This doesn't work with artworks, for example. Let's move on to the last characteristics: recognizability, divisibility, and scarcity. And now that we know the characteristics of money, we can figure out if Bitcoin could be good money. To do that, let's compare it to some other forms of money. Gold has worked as money for centuries, so let's start with gold. Gold is extremely durable, so let's give it 3 out of 3 points. Portability. Well, gold is more portable than real estate, but when dealing with larger quantities, it can be quite challenging to move gold securely from one place to another. So let's give it 2 out of 3 points. We've already covered fungibility. 1 ounce of gold is worth the same as another ounce of gold. Yes, I know, the exciting part is coming up, but it's absolutely important that we understand the basics. So, recognizability. Yes, you can check if gold is real, but let's be honest. Can you spontaneously verify if someone is paying you with pure gold or just an alloy? Probably not, but since it's generally possible, let's give it 2 out of 3 points. Divisibility. Sure, you can divide gold, But if you're supposed to pay for your bread with gold, it becomes extremely challenging to scrape off the right amount. Again, it's generally possible, but not perfect, so let's give it 2 out of 3 points. Let's move on to the last characteristic, scarcity. Gold is pretty rare, we all agree on that. However, new gold is actually mined every year, increasing the total amount by about 1 to 2% annually. Therefore, it doesn't get 3 points. One could say, gold isn't that bad as money if it weren't for problems like portability, recognizability, and divisibility. But we humans aren't foolish. So they decided back then to print paper money, and its value came from being pegged to gold. This paper money could be exchanged for real gold at a fixed rate anytime. And if we now look at our table, we see that this form of gold-backed paper money is really good, and indeed, it was. From 1836 to 1913, there was no U.S. central bank, and it was one of the greatest periods of prosperity in world history. Innovations such as the telephone, harvesters, airplanes, and the radio were invented during this time. The growth in electrification and productivity was enormous, and every country could join in. Even they printed gold-backed paper money, and since many currencies were exchangeable for gold at a fixed rate, the currencies could also be easily traded among themselves. If your country had a trade deficit, meaning it imported more goods than it exported, those had to be paid for with gold. By giving away gold, the amount of gold and consequently the money supply decreased, leading to deflation in your country. That means prices and wages decreased, making your country more competitive. The low prices led to increased demand and, consequently, rising exports, which were again paid for with gold. The money supply increased, which again led to inflation. Products became more expensive, and so the system balanced itself, all without central authorities. However, due to political interventions, the gold standards of that time faced some difficulties. This led to representatives from 44 nations coming together in July 1944 to establish the Bretton Woods system. This system stated that the US dollar was now tied to gold at an exchange rate of 35 US dollars per ounce. All other currencies were pegged to the US dollar, giving the US dollar the same value as gold. The currencies could be exchanged for US dollars or gold at this fixed rate at any time. This gold-backed system also had many positive effects. Hard work paid off, and the income of the poor increased faster than the income of the rich, narrowing the gap between rich and poor. It was once the ideal currency. But why was and once? It's often claimed that various gold standards failed because of a limited money supply. However, upon closer inspection, it becomes clear that the problem wasn't the gold standard itself, but the political elites who didn't stick to their promises. It is challenging to verify if only as much paper money is issued as there is actual gold stored in the central banks. The Vietnam War was incredibly expensive, and to fund it, one would have had to ask the public if they would be willing to contribute some of their money. But who in their right mind would do that? Who would enjoy financing a war? So the USA started slowly printing more money to fill the war chest and cover other government expenses. On the 15th of August 1971, it was finally over. President Richard Nixon ended the Bretton Woods Agreement. From then on, the US dollar and no other currencies could be exchanged back into gold. The value and scarcity of the US dollar and all other currencies were no longer tied to gold. It was just a promise from the government. It was the beginning of our current monetary system, the US dollar, the euro, and other currencies. We call them fiat currencies or fiat money, which comes from Latin and means let it be done, let money be done. But what are the consequences? Let's take another look at our table and examine our current fiat money. New money is created arbitrarily by central banks. It's no longer scarce, which reduces the value of the money. Over time, you get less for your money. We call this inflation. And the people who never really wanted to finance wars end up doing so through the hidden tax of inflation. While saving is punished, consumption and waste are rewarded, and nobody can do anything about it. Because our money is controlled by governments. Just a few people rule the world. They pursue their interests, which has devastating effects on justice in society. We see that the gap between rich and poor keeps widening because wealthy individuals benefit from being closer to the creation of money than poor individuals. We call that the Cantillon Effect. Let's look at an example. A wealthy person easily gets a loan to buy an apartment building. At that moment, money is created out of thin air. He pays an interest rate of 2% per year. He receives rental income of 6% on the invested capital. That means he makes a 4% profit every year without working. An employed craftsman earns about the same amount for his hard work, but he can't get a loan from the bank because he lacks the necessary securities. Meanwhile, the wealthy person doesn't just buy one rental property, but perhaps 5 or 10, and each paid-off property serves as additional security for the bank, allowing them to get even larger loans. And since the interest rates for newly created money might be low at the moment, other wealthy individuals do the same. And with increased demand, housing prices go up, causing the poor person who hasn't gotten a loan yet to move further away from owning their own home. And for this issue, this Cantillon effect, there is no solution with our current monetary system. One might consider the idea of taxing wealthy individuals and companies more and giving it to the poor, but that would lead to wealthy individuals and companies leaving the country. Innovations wouldn't come, but disappear, and while money and wealth centralize in other countries, one's own country would become poorer, and especially the poor would suffer. As with the leaving companies, jobs would also disappear. And there are many more negative effects that have occurred since 1971, since the introduction of our current monetary system. When we look at what's happening in developing countries, in Venezuela or Argentina, with currencies and society, we realize how well off we actually are, or better said, still are. However, delving into that would certainly exceed the scope of this video, and after all, we want to finally get the question answered as to why Bitcoin can always continue to rise in the future. But be patient. First, let's take a look at how well Bitcoin could serve as money. Durability. Bitcoin's blockchain is absolutely durable. No one can destroy it. There is no central authority controlling Bitcoin. Bitcoin is for everyone. No one is excluded, and everyone can participate in decision-making. Bitcoin cannot be banned. Bitcoin is code, and code is like language, and language cannot be banned. Anyone attempting to ban Bitcoin will always lose. Portability. You can take your Bitcoin anywhere. You just need to remember a few words, and you have your Bitcoin with you at all times. You can send them from anywhere in the world. Sending Bitcoin is as easy as writing an email. Millions of value can be sent in a short amount of time. Fungibility. One Bitcoin is exactly worth as much as another Bitcoin. Recognizability. Bitcoin operates on a decentralized network. Anyone can view it, and anyone can trace every transaction. You cannot send or receive fake Bitcoin, and most importantly, there can never be more Bitcoin issued than actually exist. Divisibility. You don't have to buy a whole Bitcoin. Just like a dollar is made up of 100 cents, a Bitcoin consists of 100 million Satoshis. You can buy, sell, or send as many Satoshis as you want. Scarcity. We talked at the very beginning about not letting anyone convince you that things are rare except for your lifetime. But I have to correct myself because there is no asset in this world as scarce as Bitcoin. There are only a maximum of 21 million Bitcoin, of which 19.5 million are already in circulation. The remaining 1.5 million will be created over the next 120 years, and then it's done. Nothing is as scarce as Bitcoin. When it comes to rare money, it's called hard money, and Bitcoin is the hardest money in this world. So can Bitcoin be good money? I'll leave that decision to you, but let's imagine waking up in a world where our current monetary system no longer exists. There's no US dollar, no euro, and no other currency. Instead, humanity collectively gets to decide what our new money looks like. There are no restrictions, everyone can participate in the decision, and absolutely no one is excluded. Which money would we probably choose? The money that finances wars, the money that creates injustice, the money that is controlled by governments and central parties, and the money that, due to its inflationary nature, causes excessive consumption of resources and the planet suffocating in mountains of waste? Or would we choose the hardest money in the world, the money that knows no borders, the money that makes long wars unaffordable, the money that makes good products affordable again, the fairest money in the world that can offer everyone in every country equal opportunities? Our system is sick, and politics tries to alleviate the pain with sometimes questionable laws. However, every law has its downsides, and there is always a need for new laws to mitigate the problems of the old ones. And we're going in circles because politics can only alleviate symptoms but can't tackle the root cause. It's just too big for them. And the idea behind Bitcoin is to heal the system from its roots, and Bitcoin's potential lies in transforming the world into a fairer and more sustainable place.
All right, and why can Bitcoin just keep rising indefinitely?
The answer is coming soon, promised. But before that, we need to take a look at whether Bitcoin is suitable as a store of value. Why are we even talking about Bitcoin as a store of value? Didn't we already mention at the beginning that money serves the function of a store of value? And we have now discussed the topic of money in great detail, right? In essence, we could have wrapped up the discussion if we had a solid form of money like Bitcoin. But unfortunately, we're not there yet. So for now, we have to live with our current fiat money. And as we've observed, our fiat money, with its unlimited money supply, is an incredibly poor store of value. The inflation eats up our savings. Central banks aim for an inflation of about 2%. Simply put, it means they want all products to become about 2% more expensive each year. And when we look at the actual inflation of recent years, it even averages around 2% per year. But is that really true? To calculate inflation, currency authorities examine a basket of various products and assess the price increase of these items compared to the previous year. However, who decides which products make it into this basket? It's central authorities again, and you'll never find equities or real estate in this basket, even though real estate makes up a significant portion of your monthly expenses. That means the real inflation is much higher than the stated 2% per year. If we look at property prices over the last 10 years, we find that the prices have almost doubled, because the inflation in property prices over the last 10 years is not just 2, but around 8% per year. And by the way, the money supply has also increased by a similar value during that time. And to illustrate how problematic this actually is, let's do a little math example again. It's the year 2012. You work hard and have an honest job. You live with your family in a small rental apartment. You're not familiar with finances because, rightly so, you have other interests. But you'd like to buy an average single-family home, which would currently cost about $150,000. Fortunately, due to an inheritance, you already have $130,000 in your account, and together you manage to save an additional $10,000 every year. It will only take 2 more years until your dream of owning a home comes true. Then the time has finally come. 2 years later, you have saved $150,000 and you start looking for a house. But you'll be disappointed because in the first year alone, house prices have risen by 8% to $162,000. And in the second year, they've increased by another 8% to $175,000. And despite saving $10,000 each year with great effort, you find yourselves moving further away from your own home. Despite saving, you become poorer every year. And even though it's thermodynamically impossible to destroy energy, your stored working time, your stored energy, disappears into nothing. That's the power of inflation. That's a reason why we've forgotten how to save and why we live in a world of overconsumption. That's a reason why there are financial products, stores of value. That's a reason why an investment advisor earns much more than a nurse or a craftsman, even though the latter professions are arguably more important. And that's a reason why you should share this video with anyone who hasn't explored Bitcoin yet. And by the way, we're not in the year 2012 or 2014. We're already 10 years ahead. The housing prices continue to rise more each year than average incomes. Many people would be happy to earn as much as the average, but that's not enough. If you want to afford a home, you need to earn more than the average, and it becomes increasingly challenging with each passing year. No one can choose their interests, right? But isn't it unfair that someone interested in health, agriculture, or craftsmanship is financially disadvantaged compared to someone interested in finance? Greetings to Richard Nixon and our current fiat system. But what do we do now if we want to save for a house, for our retirement, our children, or anything else? We need to look at a few asset classes in which we could invest to preserve our wealth. And by the way, this is exactly what every major investor does. So, which asset classes do we want to look at? I would say equities. So, companies we could invest in. Then let's also look at real estate and gold. And to make the right investment decision, we need to examine the expected returns and understand the risks or disadvantages. Some risks of equities include, for example, misjudgments by the company's management, cost increases, taxes and government regulations, geopolitical difficulties, wars, better competitors, or disruptive technologies that could render your products useless. Then we wanted to look at real estate. There we have maintenance costs, local dependence, perhaps a decrease in tenants due to regional changes, government renovation requirements, and again, wars that could simply destroy everything. In the case of gold, we encounter the disadvantages of secure storage, difficult transportation, especially across national borders, poor divisibility, the unknown quantity of gold artificially inflated via certificates, or the amount of gold still hidden in the earth or outer space. Now, let's talk about Bitcoin. And it might sound unprofessional, but I simply can't think of any significant risks. Bitcoin has no central authority that could make misjudgments. It can't be destroyed because it operates on a decentralized network spread across the entire world. Bitcoin can't be banned either. Just as you can take your thoughts anywhere, you can also take Bitcoin anywhere. And due to the network effect combined with the anchor into the real world, the proof of work, with which miners worldwide secure the network, Bitcoin can in no way be replaced. However, there still is a serious disadvantage. Bitcoin has an extremely short history, and compared to other types of asset classes, it's still very small, which causes Bitcoin to undergo substantial price swings. At the time of creating this video, Bitcoin is only 14 years old. People are not yet accustomed to it, so it appears as a risky investment. However, with each passing day, Bitcoin gets older, and the disadvantage decreases. So let's talk about the expected returns of the different assets. However, I think we can all agree that we can't predict the future. Therefore, let's take a look at the average annual return over a period of 10 years. Gold performed relatively weakly during that time, managing only an average of 1.5% per year. Real estate achieved a respectable 9.3%, and large US equities even rose by an average of 14% per year. But what about Bitcoin? The average return for Bitcoin was 230% per year. Now let's compare the risks with the returns. Which store of value should we choose? Bitcoin is the best store of value and the hardest money in this world. And as Austrian economics teaches us, and as the last millennia of various monetary systems have proven, free people will always choose the money that preserves its value and not the money that loses its value. Bitcoin is hope for a fairer world. With Bitcoin, you don't need to be interested in finance to survive in this world. Choose the best money in the world, and you'll perform better than any financial expert. But if you haven't explored Bitcoin yet, that might have been a bit overwhelming, and you're probably thinking,
What nonsense is this guy talking about?
What a waste of time.
And you likely have numerous arguments against Bitcoin. However, to briefly challenge your doubts and spark your interest, let me ask you the following. Why does a supposedly useless coin continue to exist without any difficulties since its creation in 2009 and consistently reached new highs? Why does KPMG, one of the 4 largest accounting organizations in the world, publish a report in 2023 stating that Bitcoin can be more environmentally beneficial than harmful, that emissions are much lower than in other industries, that Bitcoin contributes to supporting and advancing renewable energy, that the waste heat is used to heat buildings, that Bitcoin mining provides social value, for example by helping to supply electricity to rural areas in Africa, and that Bitcoin offers a way out for globally 1.4 billion people who do not have access to a financial system. Why did Jack Dorsey, co-founder and former CEO of Twitter, express the following statement? Bitcoin changes absolutely everything. I don't think there is anything more important in my lifetime to work on. And he said that in 2021, when he simultaneously was the CEO of Twitter and Square, which is probably also not quite insignificant. Why does Michael Saylor, the CEO of MicroStrategy, a publicly traded company on NASDAQ, say that Bitcoin is the best investment in the history of humanity? And how did he manage to convince the entire board of directors at MicroStrategy to invest all of the company's reserves in Bitcoin? Why does Larry Fink, the CEO of BlackRock, the world's largest asset manager, refer to Bitcoin as an international asset? And why has BlackRock now applied for a Bitcoin spot ETF? Why did Najib Bukele, the president of El Salvador, introduce Bitcoin as the official currency for his country in the year 2021? Why does the current U.S. presidential candidate, Robert F. Kennedy Jr., state in July 2023 that he wants to use Bitcoin, among other things, to stabilize the U.S. dollar? And why did he say the following? Fiat currency was invented to fund wars. I like base currencies because they make it more difficult. You have to go to the public. You can't just print money to fund the war and tax the public through the hidden tax of inflation. You actually have to go to the public and say, here's what this war is going to cost. Thrilling, right? Of course, you can find the sources below the video. Each of these mentioned individuals is, in their own way, a genius because they wouldn't have achieved so much otherwise. Each of these individuals likely has an entire team of advisors, and each of them has a network that allows them to know precisely what's happening in the world and where things are headed. And if you've perhaps already formed a prematurely negative opinion about Bitcoin, I ask you, do you consider yourself smarter than all these people, even though you haven't even delved into the topic of Bitcoin at all? Ultimately, the decision of whether you want to explore Bitcoin or continue living in the fiat matrix is yours. But one thing I can promise you, if you choose the orange pill, Bitcoin will change your life. And now, I want to finally answer the initial question of why Bitcoin can always continue to grow over time. Bitcoin is the first free money that can't be controlled by anyone, and the first asset where production depends on time and not on price. This makes Bitcoin the hardest money in the world. Nothing fulfills the essential properties of money as well as Bitcoin, and the best will prevail in the long run. At some point, it won't be necessary for people to engage with Bitcoin because it will become an obvious store of value, much like gold, equities, or real estate are today. Today, you're considered special if you own Bitcoin. Later, you'll be considered strange if you don't own any Bitcoin. It's understandable that older people often find it difficult to recognize the value behind Bitcoin because they have lived with equities, gold, and other assets for decades. The age of digitalization is more exciting for the younger generation. But where is most of the money? 90.4% of the world's billionaires are over 50 years old, and 42.2% of the billionaires are even over 70 years old. As we know, our lifetime is limited, and the wealth of the older generation is passed down to the younger one. I don't think I need to mention that today's youth no longer writes letters, but sends digital images, and that they appreciate the advantages of a free, digital, portable, and scarce asset more than the dull golden glow of metal. And now, let's take another look at the assets mentioned earlier and how global wealth is distributed. Globally, there are approximately $109 trillion invested in equities, $330 trillion in real estate, $12 trillion in gold, and just $600 billion in Bitcoin. The only disadvantage of Bitcoin is its short history. This drawback diminishes every day. The risks and disadvantages of the other assets persist. This imbalance, coupled with the higher returns, will not only lead to newly created money flowing into Bitcoin, but also cause Bitcoin to withdraw wealth from other asset classes until the risk-return ratio is balanced again. Even real estate prices will rise less because they won't be exploited as investment assets anymore, but will be used for their intended purpose: housing for people and families. When you break down every product, every service, and every idea in this world to the lowest level of its existence, simply everything consists of energy and time. Bitcoin is and remains unique because it works without central authorities. It operates solely on the fundamental levels of energy and time, which is how it creates a bridge from the digital to the real world. This characteristic makes Bitcoin unique and irreplaceable forever. Anyone who becomes a Bitcoiner stays a Bitcoiner, because they have understood Bitcoin. They know there's no catch. They know that Bitcoin can't be destroyed, replaced, or banned. They understand that Bitcoin's energy consumption is not a problem, but a feature. They are aware that false statements about Bitcoin get more attention than accurate information, making misleading claims a common occurrence in mainstream media. And the number of Bitcoiners keeps growing because Bitcoiners tell their friends about Bitcoin, and the demand for Bitcoin rises exponentially due to the network effect. Bitcoiners buy Bitcoin and don't let it go. And this is not just a theory. The Bitcoin blockchain is public and accessible to everyone. Anyone can track each transaction, and we can observe that the amount of coins that haven't been moved for at least 5 years continues to increase, despite the fact that the value has been fluctuating between $3,200 and $67,000 in the last 5 years. So for instance, some coins were bought at $4,000 and still not sold even when the price reached $64,000. This is because the owners, these Bitcoiners, have comprehended how incredibly valuable Bitcoin will become in the long term. Of course, Bitcoin is currently very unpredictable, and there are big hype phases. But to understand how Bitcoin is being adopted, don't let the heights of the hype phases confuse you. Instead, look at how the new low points keep reaching higher levels, which is because more and more people are becoming Bitcoiners. Worldwide, there are 22 million people with investable wealth of at least $1 million US. If every one of these millionaires wants to have just one Bitcoin, there wouldn't be enough Bitcoin for all of them. The Bitcoin holdings on exchanges have been decreasing for years, and the supply of Bitcoin is limited. Out of a total maximum of 21 million, over 19 million are already in circulation, with 1 to 3 million of them permanently lost. The increasing demand combined with a continuously decreasing supply inevitably causes the price to rise. Additionally, since the abandonment of the gold standard, the money supply has been rapidly increasing, leading to real inflation being much higher than the targeted and often stated inflation of 2% per year. Our money is continuously losing value. Everything becomes more expensive, and there is no limit. And now, our inflationary money system with an infinite money supply meets a limited asset. And if you ask me what value Bitcoin will reach, I ask you, what is infinity divided by 21 million? Well, dear ones, I appreciate that you've held on with me until this point, and I admit that it was a bit simplistically explained at times. Still, I hope I could inspire some no-coiners to take a closer look at the topic of Bitcoin. But to wrap up, I want to share something crucial. Bitcoiners always say, don't trust, verify. Do your own research, read books, or watch reputable Bitcoin-only YouTube channels. The German block trainer website is highly recommended, and you can easily translate it using common browsers. Below my video, you'll find some helpful links to books and media that can make it easier for you to get started. And if you want to encourage me to create more videos, feel free to leave a like and subscribe, also to not miss out on any future videos. If you're already a Bitcoiner and I might have forgotten to mention something, please feel free to let me know in the comments below. And if you know someone who also deserves to explore Bitcoin early on, please feel free to share this video. Perhaps this is a way we can inspire more people to engage with the topic of Bitcoin.